someone asks you, what is export finance, you will probably say it's the loan to exporters. And yes, that's technically correct, but that answer only scratches the just the surface. Today I want to explain you what export finance really is in a simple plain language, and it will be simple enough that anyone can actually get it. So stay by the end to learn what actually is export finance. So now, export finance, this name sounds dry, right? Like something you would probably read in your textbooks and immediately forget. But here's the thing. If you have ever wondered how Indian manufacturers manage to ship their goods to buyers in, say, Germany or maybe in US or in UAE, and they actually get paid without going broke in the process. Now, the answer for this is export finance. Now, it's the unsung hero of the global trade. You can say quietly working behind the scenes to make sure that every deals to make actually happen. Okay, so let's first understand the problem. See, when a business sells a good or services, say internationally, you are in your own nation, here it is internationally. Now when someone a business try to sell its good or services to someone in international, in other nation, in simple words, it's not as simple as just handing over your product or just collecting the money. There are so many things that can go wrong. You don't know the person, you don't know the language, their countries requirement, many things, right? Now what if suppose what if the buyer, he delays your payment, just say 90 days, and maybe if the currency exchange rate moves just against you, say you shipped at 90 when USD was, say, 90, but when it's time to collect your payment, USD drops, INR drops to just say 85, right? Now what if the buyer, of the company whom you delivered the good, he goes bankrupt before they even transfer the funds to you? These are not just rare scenarios, they happen all the time when you are in international trade. And for a small, or say I can say mid-sized manufacturer, even one of these problems can be devastating, right? Now this is exactly the gap that the export finance actually fills, right? It helps businesses manage those risks so they can stop worrying and focus on only what they can actually do best. And what a manufacturer can do best, they can make great products and find great buyers for them, right? Okay, now let's talk about the most painful challenge. Now the first one is payment delays. Now just imagine you have manufactured and shipped you a container full of goods to a buyer in another country, right? Now if the goods have left your warehouse, you are say here, and the goods have left your warehouse and the buyer have just received them. But what about the payment? That comes in 60 to 90 days, right? And sometimes the time goes to 120 days later. Now in the meantime, you still have to pay your workers, the raw materials you rent for, and maybe you need more raw material for the next order, and to keep the whole operation running. Now this complete process running, that cash cap can be crippling, right? It doesn't matter how good your product is or how reputable your buyer is. If you don't have cash flowing in, your business can stall, right? So, and just imagine, then there is another risk, that is currency risk. Say if you are selling in US dollars or maybe say euros, the exchange rate can shift overnight, and all of you have seen that, right? A deal that looked profitable when you signed it, can suddenly look very different by the time when the payment will actually arrive to you, right? Now these fluctuations are unpredictable, and they can quietly eat into your margins without you even realize it, right? And let's not forget about the buyer insolvency. This is a nightmare. What if the company you shipped, it just shuts down? it gets maybe acquired or simply can't pay. Let's say if the buyer goes bankrupt, or maybe you in that case you could lose everything, right? Now in a domestic transaction you might have some legal recourse, but internationally it becomes extremely complicated and most importantly expensive. And let's not forget about the last risk, that is shipping and logistic risk. Shipping your goods internationally. What if the shipment you shipped gets lost or maybe damaged? Now, export finance can provide you insurance against, right? Against all of these four risks. Now, giving you peace of mind, which honestly gives you a completely different level of confidence while dealing with your buyers, right? Okay, now let's understand how export finance actually works. There are there are just few key tools, sorry, and each one will solve a different part of the problem. Now, the first and most well-known one is the letter of credit, that is LC. All of us know that, right? Now, you can think of it as just a formal guarantee. Now, from the buyer's bank, right? Now, it says, just listen this clearly. Now, if the seller delivers the goods as agreed, we promise to pay. So even if the buyer has a cash crisis, or maybe he tries to delay, the buyer's bank, that is committed to pay you, and the payment will actually happen. Now, for example, let's say if you are selling a machinery to a buyer in Brazil worth say 100K, now, right? The buyer's bank has issued an LC guaranteeing that payment as long as you ship on the time and meet the agreed condition. You need to read your LC carefully, right? You need to fulfill all the condition. Now, it takes a huge amount of uncertainty out of the picture for both the sides, for the exporter as well as say importer, right? Now let's learn about the next second tool, that is export credit insurance. Now this is exactly what it sounds like, simple insurance, specifically just for your export. I'm not saying for your goods, it's for your export transaction. Now if your buyer can't pay, whether because of maybe financial trouble or say political instability in their country or maybe any other reason, your insurance that will cover you. So instead of absorbing a massive loss, you have at least a safety net. Now, this is especially useful when you are entering into a new market, or maybe you are dealing with a buyer who is completely new and you have never worked with him, right? Now, the third one is factoring. Now, this is really practical tool for businesses that need cash quickly. Now, say instead of waiting, say up to 60 to 90 days for your payment from your buyer to pay, you sell your invoice to a financing company. Simple, and that is called a factor at a very small discount, right? Now they give you most of the money upfront, and then they it's their duty to collect from the buyer when the payment is due. It's not free money, but it keeps your cash flow healthy, right? Your cash can move, and let's you move from to your next order without waiting just for your money from your buyer. And then I have not mentioned your pre-shipment, but let me give you just a quick idea for that. Now the pre-shipment finance, this is something most people have never heard, means not enough heard of, that will be the right to say. I'll explain in my next video what is this, but here I will give you just a quick view. Now this is the funding given to a manufacturer before they even ship their goods, to cover the cost of raw material, production, packaging. Because here's the reality: to fulfill a order of say 2 cr export orders, you might need 80 lakhs just to start it, right? And pre-shipment finance makes sure that the um, lack of upfront capital, that is 80 lakhs, can't stop you from taking that big opportunity, that is the big order, right? We will learn about it, but later on. So export finance can be real game changer for businesses. We have seen that it can help you grow your sales, enter new market, build relationship with buyers who you might otherwise think they are too risky. Now, let me give you a real world picture why all of this matters. Just imagine a coffee exporter to Europe who wants to break just into the European market. The opportunity is huge for him, right? But he's so anxious. What if his European buyer doesn't pay him? What if the shipment gets delayed and the payments terms get complicated without any protection? Now, this risk feels too high to take, right? But with export credit insurance in place, the same business can just move forward, right? They can think of doing this business, right? Now they can say spend their energy on building relationship with the buyer, improving their product and marketing, instead of just lying awake worrying about what happens if something goes wrong. And that confidence, that's what eventually lets them for a long term contract, right? They couldn't have even dreamed of without that safety net, and that is export credit insurance. Now this is the real power of export finance. It doesn't just protect you from the losses, it gives you the courage to say yes to every opportunity you would otherwise walk away from. Now, just the bottom line is that export finance can help your businesses overcome the challenges of international trade. It's not about just managing the risk or mitigating the risk, it's about seizing the opportunities and growing your businesses. So, what are the key benefits of export finance? In a nutshell, it helps businesses manage risk, gets paid them faster, grow their sales internationally, and build a stronger relationship internationally, right? So if you found this useful, please hit that subscribe button so that you don't miss it. And if you have had any experience with your export finance, maybe good or maybe bad, I would genuinely love to hear about them in the comments. And international trade is a topic which we will be talking in the next few videos.